Yeah, hope you guys are seeing my screen.
Yes, can see us clear on the screen.
So this was yesterday's class. You know, I dropped something about BTC. You can see BTC is heading south. BTC is heading south. I'm currently trading BTC right now. You know, BTC is heading south. You can see how this candle is closing. Are you seeing it? This closed with an engulfing candle, with a huge bearish candle. So right now, BTC is dropping. It's dropping. So I'm expecting this candle now to turn bearish. This candle that you are seeing. Are you seeing what is happening on H4? Hello?
Oh, yes.
Yeah, are you seeing what is happening on H4? So you see a higher low, a higher low, lower low, sorry, a lower high, lower low. Now, lower high. I'm starting from where? I'm starting from lower high. Are you seeing it, guys? People that ask how to enter a trade, how to short, where do we short from? Are you seeing it? This place is a resistance. This area is a resistance. Hello?
We can hear you.
We're hearing you, sir.
Yeah, so you can see that this area is a resistance. This particular area is a resistance. So price is reacting to this place. Price failed to break above it. You can see how many rejection. 1, 2. The third one before price started dropping. So this area is a resistance. And I entered my short from the lower high. I didn't enter my short here. Did I enter my short here? No. I took my short from the lower high. So that's the thing. I'm expecting BTC to drop to 49 to between 35 to 34K first. Then I will now wait again for it to break this place. Once it breaks this place, you see, another place is what? 30K, 28K region. So embrace the dump. This is the reality. This is the reality. So let's continue with our today's class. You can see the rising wedge was broken. Completely, it was broken. Are you seeing it? So now retest is complete. The price will dump from here. So yesterday we discussed about market structure, where I told you guys that market structure is the study of what? Is the study of market behavior. It's the study of market behavior, and it's very, very important as a trader. You know, the first thing you need to do is just to identify the direction of the market. You understand? Identify the direction of the market, then utilize the opportunity based on what? Based on what you are seeing, based on how the trend is forming or how the trend is going. So you write according to trend, don't go against the trend. Right now that BTC is dumping, market has been dumping since November, you know. as it's going, is making what? Is making continuation patterns of that trend. Continuation pattern in let's say now, as we are in bearish markets now, you will not see a bullish continuation pattern inside that what? Inside that bearish trend. You will not see a bullish what? Continuation pattern. What you'll be seeing is what? Bearish continuation patterns all through until price will get exhausted. Then buyers will take control of the markets. So there are a lot of sentiments that price will come back, will bounce back from 30K on BTC. I said, how will price bounce back again? Because price tested this zone how many times? Multiple times. It tested within this 30K, 28K psychological support. That's tested this zone multiple times. So right now it's heading back again to test it. Believe me, this time around, price might break this particular zone and what? Head much lower. Head what? Much lower, 2416K. You understand? Head much lower. But we are not praying for that, for price to break below this zone. If price should break below this zone, people holding portfolio, their portfolio will turn to dust. So let's hope that the institution traders will come in once price gets to 30K, 28K region. So how do you determine this now? Market structure is very, very important. And we discussed about what? 3 types of market structure yesterday. Who can tell me the 3 types of market structure that we listed here yesterday? Who? Unmute yourself, answer.
We have the trending.
Okay.
Then we have the ranging and the choppy.
Okay. So yesterday we discussed about the trending markets. So I said trading market is what? Who can tell me what trading market is all about? Another person should give it a try.
Is the repeating pattern of higher heights and higher lows
Okay.
in an uptrending market,
Okay.
and lower heights and lower higher and lower lows in a downward trend market.
Okay. That's good. So we said the trading market are simply characterized by repeating patterns of higher highs and higher low in an uptrend market, and lower high and lower low in a down trending market. So we also gave a graphical representation of how trending market looks like. We drew this as what? As a picture of how trend market looks like, and we visited some charts using BTC, Telus, and other charts that we looked into to show us what? How trends, how uptrend at that trend works. So I said, this is what I mean by what? Market creating a patterns. You see, you can see this thing now is the same pattern, creating same pattern, forming what? Higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, until it gets what? Exhausted. Until it gets exhausted. When market gets exhausted at the end of a trend, you will see a reversal. You will see a reversal pattern, indicating that what? Sellers are about to, you need to close the door now. Indicating that sellers are about to take over from the market. You must see signs like what? To give you a reversal pattern. So who can tell me the reversal patterns that that indicates what? Change of trends? Who can tell me?
Double top.
Okay.
Head and shoulder.
Okay.
Rising wage.
Okay.
Triple bottom.
Now, triple top.
That's right, yeah.
Okay, it's okay. It's okay. You guys did well, Sha. You know, my class is always interactive. So I will be asking questions based on the previous class and all that to know if you guys really understood what I taught, you know, previously. So now that what at the end of a trend, we had what? We had a double top, or we had our chart patterns, reversal chart patterns formed, you know. Then market started what? Dropping from there. Started dropping from there, you know. As it's dropping, it will be forming what? It will be forming what you will now be seeing is continuation patterns, just like we saw on BTC. We saw on BTC here. Are you seeing this continuation pattern? This is a continuation pattern. This thing now is a continuation pattern. So market will be forming what? As it's dropping, to be giving you continuation patterns until it gets exhausted. So that's how to ride. That's how to ride trend. So don't go against it. You might buy pullback, but it will not last for a long time. The market will continue its movements after pulling back, after making corrections, after making retracements. Are you following, guys? So it will continue its movements. So right now, as on downtrend, market will be forming what? Lower highs and lower lows, lower highs and lower lows. And I told us that if you are entering a trade, just like we are in a downtrend now, don't make your entry at lower lows, please. Lower lows supposed to be a take profit area. It's not supposed to be entry point area. Just like you saw my BTC chart now. I made my entry at lower high. I didn't make my entry at lower low. So I made my entry at lower high to take profit at lower low. So that's how to ride a trend. Please don't make that mistake, so that you will not turn to exit liquidity for market makers. Now let me give you how to trade trending markets. You can write how to trade trending markets. If you can identify a trending market, if you can identify a trending market, it will be easy for you to trade it. If it's a bullish market, you will look for a buying opportunity. You know, that was the statement I made, that if market is bullish, you will look for a buying opportunity. You will not look for a selling opportunity in a bullish market. You will not look for what? A selling opportunity in a bullish market. Because those sales will just be a retracement. It will just be small sales. It will not be the major move. The major move will be buy. So you look for what? If market is in a bullish mood, you will look for a buying opportunity, because you have to trade with the trend. You have to trade with the trend. And if the market is bearish, you have to look for a sell opportunity. So don't buy in a sell market. Don't buy in a sell market. So trending markets are characterized by two important moves. They are characterized by two important moves. The first move is called what? Who can tell me the first move? Hello? I gave us two moves yesterday. Who can tell me the first move? Oh yeah, what is this thing called? This movement now, what is it called?
Uptrend.
No, this arrow now. From here, from the low, from the higher highs, from the higher low to the higher highs. What
It's
is
an
the
up.
movement?
It's an upward trend.
Not upward trend. The movement here. What is it called?
Bullish market.
Yeah, not-
I don't want to know. The bullish market.
Please, if you are not answering the question, mute yourself, please. If you want to answer question, just unmute and answer. I said yesterday that what? You didn't jot the stuff down. I said the movement from here, from the higher low to the higher high, is impulsive movement. Hello? Hello?
Yes, so we are following.
So this is an impulsive movement. You understand? So market makes what? Impulsive move. Then the second one is called retracement. The second one is what? The higher lows are the what? Are the retracements.
Retracement.
Or pullbacks. Or corrections. So as the markets, the trending markets are characterized by two moves. The first move is called what? Impulsive move. And the second one is called retracements, pullbacks, or corrections. So the pullbacks are what? Are the higher lows that the market makes. They are the pullbacks. While the higher highs are the what? They are the impulsive move. So professional traders understand how trending market moves. They always buy at the beginning of an impulsive move. They always buy at the beginning of an impulsive move. That was why I said yesterday that if I want to buy, I will buy from here. This is the beginning. This is another beginning of impulsive move. I will buy to what? To this place. Are you following? I will buy from here the higher lows to the higher highs. Why I sell from the what? I sell from the lower high to the lower lows. All right. So they always buy at the beginning of an impulsive move and take profit at the end of it. So the take profit now is there. The end is what? At this place. Before another correction, you know, you will not allow the market to eat deep the profit that you made, right? You will not allow it to happen. And again, it depends on the kind of trader that you are. If I'm a swing trader now, I will just leave it. What I will do is what? I will make my entry here. Then as price move from this point to this point, I will set my stop loss at, my stop loss will not be here again. My stop loss will not be here again. I will now move my stop loss to point of entry. Slightly above the point of entry. You understand? So that I will be risk free. while I hold my trades to the end of trend. That's if I want to go swing. If I want to swing a trade. But if I just want to day trade, if I just want to do intraday trading, let's say within a day, I will just be taking it from higher lows to the higher highs. I will go. Tomorrow again, I will wait for another retracement and enter from here to here. So that's how to trade.
So you're saying my stop loss should be above the entry?
Just like I entered from BTC. I entered, let's assume now that this is BTC and price is selling. I entered BTC at this lower high now. So I'm waiting for price. If price should go like half of my trade or 20% or 30% of my trade, I will set my stop loss. This stop loss that you are seeing here, this 0.918 something as stop loss. You know, the purple line here is my point of entry. This purple line is my point of entry. You know, then I will now bring this stop loss that is here. I will bring it slightly below. It will still be in profit, but I will put it slightly below my entry point here so that I will be risk free. You understand? So that I will be risk free. You can as well take partial profit as your trades progress, let's say 30%. You can as well take partial. You take something from it, take small profit. Then now set your stop loss to what? To your entry points. So that if anything should go bad, or if markets should maybe reverse or make a smart move, hit your stop loss. Instead of hitting your whole stop loss, it will now be what? It will exit you from point of entry. Then you will not go empty-handed. You've already taken small profits from it, right? So that is how to trade. You also what? Know how to protect your equity. Trade smart, be a smart trader. Are you following? So you don't have to open yourself up to the market or give out your profit to the market. No. So you have to what? You have to act what? Smart, because all these market makers, they're very smart people. They are very, very smart people. So let's continue. So I said professional traders understand how trading market moves. They always buy at the beginning of an impulsive move and take profit at the end of it. This is the reason why the market makes an impulsive move in the direction of the trend. It makes an impulsive move in the direction of the trend, just like we have here, you know, and retraces before it makes another impulsive move. You know, market will retrace, then make another impulsive move again. This is the reason why the market makes an impulsive move in the direction of the trend and retraces before it makes another impulsive move. Then, if you are aware of how trending market moves, you will know that the best place to buy is at the beginning of an impulsive. Okay, I've made that statement. So if you buy at the higher highs, you are in trouble. Just count it that you've given out your money to what? To Binance, or you've given your money to KuCoin, or you've given your money to OKS, or you've given your money to Get.io. They will smile and use you as exit liquidity. Note: to predict the beginning of an impulsive move in a trending market. Note: to predict the beginning of an impulsive move in a trending market, you have to master drawing support and resistance. You see, we've entered another what? We've entered another trading two. Another trading what? Two, which is support and resistance. That's why I said you master market structure first. Then you now bring what? You now bring what? Support and resistance. As a trader, you don't need only one thing to judge what? To make your judgments. Please. Hello, are you hearing me? Are you hearing me?
Yes, we are.
Okay. I said,
Yeah, boy, yes.
I said don't use one particular confluence, or sorry, not confluence. Don't use one particular tool to analyze your market. Please, never you try that. Never you try that. Bring everything together. Bring all the technical tools that you know. Bring them together. Then it will form a confluence to give you a clearer view of how the market moves. Some newbies will go to Binance. Look at what they do. They will go to Binance and open Binance charts. As you are seeing me now, am I using Binance charts to analyze my trades? I'm not using Binance charts. You know why? Most of these exchanges that you see, their charts look different. Their candle patterns appear differently. And that's how they make people to lose money. These guys are business people. If you're not smart, they will take your money and put it inside their pockets. I did not use Binance charts here to be analyzing my trade. So people will come and use only Bollinger Bands. How can you use an indicator to make your judgment? Indicator that lacks so much to make your judgment. So people will come and be using moving average to make their judgment, neglecting other technical tools that are important, neglecting their support and resistance, neglecting their zones. So please don't do that. Learn to bring, as we are teaching you all these things, giving you step-by-step guides of technical analysis. So learn to bring all these things together to what? To better your trading journey, to better your what? Your decision making in trading. Please, just like I'm teaching you market structure now, tomorrow you will use only market structure as a bias for taking your decision or making your entries. It will not work. All right, let's continue. I said, note, to predict the beginning of an impulsive move in a trading market, you have to master what? Drawing support and resistance. So let me just give you a tip, or maybe I don't know if DK touched support and resistance, but let me just give you a brief meaning of support and resistance. You know, support and resistance are proven areas. They are proven areas where buyers and sellers find some equilibrium. You know, between here and here, there is equilibrium, right? There is what? Equilibrium between here and here and here. They are what? They are balanced. You know, markets must find what? Some proven areas whereby buyers and sellers find what? Equilibrium. They will surely meet together. Just have a small meeting. They will have a small meeting. This one will say, I beg, leave market for us now. don't buy again, just drop price so that sellers will sell. You know, they will have a meeting point. They will have a meeting point where they show their strengths. They show their strength on who to what to take over the market, whether buyers or sellers. So support and resistance area they are proven areas where buyers and sellers find some equilibrium. They are the major turning point in the market. That's why whenever price touches support and resistance area, just like we have here on BTC, just like we have here, like now, I told us that this place is a resistance area. This place is a resistance area. And what happened? Immediately price approached that resistance area. What happened? There was a sharp reaction. How do you see those sharp reactions? You see it by weeks. You see all these weeks that you are seeing. Whenever price approach an area, like look at what happened at 40K between here. Look at what happened between here. You can see, you see your resistance, you see your resistance, you see your support, you see your support here, you see your resistance here, you see another support. So whenever price approach what support and resistance area, you must definitely see a reaction by week. All these weak reactions, you must see it. Market will
So
reject.
sorry, sir. So when we draw our support and resistance, especially the resistance, do you put it where the candle starts or where the wicks end?
Yeah, sometimes you can put markets can touch within the candle bodies. I can see now here is on top of candle body here. It's not on top of wicks. Here is on top of wicks. You can see. You understand? Sometimes it will overlap. It will overlap. What do I mean by overlapping? Let's assume now that this is a zone, right? Then sometimes you see something like this. It will touch that line very well. Yeah? You understand? Then sometimes it will appear like this. It will not touch that line. Are you following? Then sometimes it will eat up the line. Are you seeing it? So this now is what? 3 scenarios of how support is. Are you following? So this place now is support. Here is what? Resistance. Here is what? Support. Here is what? Resistance. Here is support. Here is resistance. So that's how support and resistance is. So that's what you are seeing here. You can see this one now touched. This one didn't touch. This one's touched. This one's touched. This one's touched. This one's touched. So that place is what? That place is a support and resistance area. So they are the meeting points. They are equilibrium points where buyers and sellers meet. They must meet at a point. And whenever they meet, you will see what? you will see a weak rejection. Are you seeing what is happening here? Did you see a weak rejection here? Did you see a weak rejection here to show that price has approached what? A resistance area. Look at weak rejection. So that's how it is. So support and resistance levels are found when price reverses and change direction. So whenever price approach that area, that equilibrium area, it will change direction. It's either it breaks its change direction or it continues what? It continues its what? Normal direction that it's going. So it will leave you with break and retest. To leave you with break and retest. So support and resistance levels are found when price reverses and change direction. And price will often respect these support and resistance levels. Price must definitely respect that levels. You know, in other words, they tend to contain price movements until, of course, price breaks through them. So whenever price breaks through a support, what will now happen? It will now turn what? Resistant. It will break through, then retest. Use that area as a resistance before dumping. This is what happened here. You know, my own is practical. Look at what happened at this place. Price broke through this area, isn't it? Price broke through this bearish rising wedge here. Price broke through it and do what? Is retesting now. Is retesting now. So as price is leaving a rejection here, the next candle that will pop up is bearish. The next candle, if this candle should close like this now, for example, if this candle should close like this, the next candle that will come up will now be what? White candle. It's a bearish candle. Are you following? Are you confused? Talk to me, guys. Talk to me. Let me hear from you. Hello? Am I talking to people or I'm talking to myself?
No, you're talking to people.
Any
Coach,
confusion?
No, coach, we are following. We are following. We are
All
following.
right. All
No
right.
problem.
All right. Just mute yourself.
Okay, sir.
So, just like you are seeing now, that it broke below this bearish rising wedge, is currently retesting. Even the test is almost complete, then price will continue to dump. So that is the reason why I said if price should what? If there is a breakthrough support level, price will now do what? Retest and continue dumping. So in a trending market, support and resistance are formed from swing points. They are formed from swing points. They are formed from swing points. What I mean by swing point is what? All these areas here. Here is a swing point. Eh? Here is a swing point. Here is a swing point to this area, to the higher highs. Here is also a swing point. So in a trending market, support and resistance are formed from swing points. In an uptrend, the previous swing point acts as a support level. You can see the previous swing point act as a what? As a support level. The higher highs, the higher lows are the swing points. They are the support levels. So I'm entering my trade at a swing point. I said this yesterday. So note all these words that we are using as a trader. You know, you have to note them. Swing points. Underline swing points. Brackets. That when you put in a trending market, support and resistance are found from swing points. You know, swing point. Then in an uptrend, the previous swing points act as a support level. Brackets, higher low. Put higher lows there. Higher low, HL. So that you will know that HL is a swing point. And in a downtrend, the old swing points acts as a resistance. The old swing points now act as a resistance. So who can tell me the resistance of this downtrend now? Who can tell me the resistance? Where is the resistance located? Hello? Hello?
Yeah.
If you know, you just answer.
Sir, I didn't get your question, sir.
Okay,
What did you say?
I said in a downtrend, the old swing points acts as a resistance. So who can tell me the resistance and as in on downtrend? Who can tell me where the resistance is?
I think it's lower low, sir.
For a downtrend, it will be opposite of the uptrend.
No. The resistance will now be on lower high. Huh? It should be on lower high. I told us that yesterday, if you are selling,
Yes.
if you are selling, you sell from a supply to what?
Okay.
To demand.
Right? Yes, sir.
Sell from a supply to demand. If you are buying, you buy to what? You buy from demand to what? To supply area.
Yes, sir.
Are you following?
Yes, sir, we're following.
The higher lows are the demand areas, while the lower highs are the supply area.
Okay.
Because a demand and supply thing. All right, let's continue. Another way to catch the beginning of an impulsive move is by drawing the lines. Okay, we did that yesterday now. You can draw lines. This is another technical skill that you have to learn if you want to identify key linear support and resistance level. All these lines that you are seeing here, all these lines, you can place a line. If you don't want to use this now, you can do what? You can use a horizontal line. You know? Okay. Quite often when the market is on the move, making new swing highs and lows, price will tend to what? To respect the linear levels, which is identified as what? Trend lines. You know, price will be respecting this level. I told us yesterday that price will later revisit these levels. They must surely revisit them. Even if it takes 2 years, price must surely revisit these levels. So Bullish market will tend to create a linear support level, and bearish market will form a linear resistance level. You see? So resistance level, what? Entering your trade by lower high to what? To lower low. Resistance level, you are selling from supply area to the demand area. Then why the bullish market, you are doing what? You are buying from a demand zone to the what? To the supply area. So that is it. Let's go over to the ranging markets. Any question before we go over to the ranging markets?
No, sir, we are okay.
So I should fire on.
Yes, sir, fire on.
All right. All right.
Yes, sir.
So number 2, ranging markets. Ranging markets are pretty straightforward in nature. Ranging markets are pretty straightforward. They are often called sideways markets. Underline that word, sideways. Underline sideways market, or you can highlight it with your pen. Because their neutral nature makes them appear to drift to the right horizontally. Trading markets are pretty straightforward. They are often called sideways what? Markets. Whenever you see markets going sideways, horizontally, it is called a ranging market. Because they are neutral, because it is neutral in nature. For example, you can see that market was trending down. After trending down, it starts making this kind of funny movements. Don't worry. You guys will soon, you will start analyzing, you start talking like this. I was a student like you. I attended this class, RCA. Hello.
Hi, you are here.
So I was a student.
Wow.
Like you. But now look at me.
Wow.
So don't take this thing that is what is difficult.
Well, okay.
So all I need from you guys is just to practice.
Yes.
Practice. COVID really helped me a lot. I use my COVID period to learn most of these things. So let me remove the extension.
But sir, which exchange chart is this?
This is a Telos trade, but I don't really know. And I used to add, okay, this is from KuCoin.
Okay, KuCoin. Okay.
This is from KuCoin, yeah. You know, for example, now this market is going down, and at the end of the day, you find yourself in this kind of situation. In this kind of situation now, you can see that this is a horizontal situation, and it's a sideways movement, right?
Yes.
So when you see this type of market now, you know, it is a tricky one. It's a tricky market.
Trickies.
Yeah, and is a kind of market that is what? That is an indecision. Let's say indecision is taking place here. There's indecision here now because the market is no longer trending like this. Are you following?
Yes, of course.
So you are no longer seeing your higher highs and higher low. So what do you do here when you see this type of market? You do what? If I'm to see this type of market now, what I will do is what? Is to relax. I will not trade.
Okay, you stay sideline.
Yes, I will do what? I will wait and observe and see where the market will break out from.
Okay.
You understand?
Yes.
Some people like this type of markets because of what? Because of the tops and bottom. They will be trading tops. They say top is a resistant area. All this area now, here is resistance. Yeah? Why this place? The down one is the support. The down one is the what? Is the support. So some people will see when price touch the resistance area, they will sell. You understand? When it touch the bottom, they will buy. So they are trading top. They are trading top and bottom. You understand? But
yes,
the reason why I said this market is tricky is what? Sometimes you might be buying. You understand? And price will just go halfway. If you go halfway and do what? And turn back again, hit your stop loss.
Okay,
So,
I get you.
So if I see this type of market, I will stay away and wait for breakout. Breakout can happen from here. Whenever I see the price like this now, yes, I will smile and say, yes, sellers are about to take over. I will now wait. Price will do what? Price will test.
Risky.
Are you following? Price will
Yes.
now test. I will now say, okay, sellers they are now in the market because a breakout occurred here, right? Price broke out from the support, now turn to resistance. Use this area, the previous support, as a resistance, right? So I will now make my entry at this area. Am I making sense? Hello?
Yes.
You are there, sir.
So you can see that this market is quite different from this. So it's quite different. So here now, if I'm selling, I will make my entry at this point, having seen a breakout below. Likewise, buying. If I want to buy now, for example, I will wait for a breakout here. A breakout to occur. Before what? Buying.
Yes.
I'll buy at this region.
Depreciate.
So having seen this now, you will now use this area as what? As your higher low.
Yeah.
Eh? You now use this area as your higher low.
Yeah.
What? To higher highs. Why you use this area as what? Lower high to lower low.
High. Lower low.
So that is ranging market for you.
We're there with you.
So let's continue. Any question?
Sir.
Any question?
For now, no question.
So the reason why I said let me come back, because I followed the previous class, you know. So I said, okay, now let me go in details so that you understand it very well. So right now, this is a ranging market, graphical representation of ranging market. Then let's see if you can spot a sideways movement on charts. Let's see. Now, you see this area? Huh? I see this area.
Yes.
So this is an example of it. This is an example of it. You know,
Okay.
price is in a range. I see it moving top and bottom, top and bottom. Price touch here, dump, touch this area, dump again. You see this one now? It didn't touch. It didn't touch the peak. I seen it. It didn't touch the peak here. It just touched halfway or more than halfway. Now dropped. Likewise here. Here I didn't touch. So that's an example of how ranging market works. So on seeing this now, I will just stay away from it. Although I took myself from here. Because it's the last point and price didn't break this level. So I took myself from here. So that is an example of ranging markets. Let's identify on Ethereum. Are you seeing Ethereum? Are you seeing Ethereum? Hello?
Following.
Yeah, so this is Ethereum. The same thing, ranging inside the channel. All right, let's continue. You can make this drawing. You can draw this. Then I said, you can write, when the market makes a series of higher highs and higher low, you can say that the market is trending up. But when it stops making this, please mute yourself. So I said, when the market makes a series of higher highs and higher lows, we can say that the market is trending up. But when it stops making these consecutive peaks, we say that the market is ranging. Likewise, sell. You know, when a market stops making higher highs, lower highs and lower lows. When it stops making what? The lower lows and lower, just like what happened here. You say the market is what? Is ranging. The ranging markets move in a horizontal form. It moves in a horizontal form where buyers and sellers just keep knocking price back and forth. You know, here, they keep knocking price back and forth. That is why I said it's an indecision or indecisive market. Because buyers and sellers are fighting. They are fighting kung fu in this world, in this place. They are fighting on who to take over, whether it's the buyers or the sellers. So whoever that wins will take over from the market. Then the other one will now be on sideline watching. The other one will now become a spectator. So the ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between support and resistance level. That is what is happening here. Buyers bought, sellers sell, they sold. Buyers bought again, they sold, you know, until breakout happens. The difference between trending market and ranging market is that trending markets tend to move by forming a pattern of higher highs and higher low in a case of an uptrend, and higher low and lower low. Sorry, lower high, correct this, lower high and lower low in a case of a downtrend. The difference between trending markets and ranging markets is that trending market tend to move by forming a pattern of higher high and higher low in an uptrend, while lower high and lower low in what? In a downtrend. But ranging markets tend to move horizontally, between key supports and resistance level. Understand this difference. But ranging market tend to move horizontally between key supports and resistance level. Your understanding of the difference between the both markets will help you better use the right price action strategy in the right market condition. So it will help you. If you know these two, it will help you. Ranging market is tradable, but is very, very tricky to trade. You can as well trade it if you like. So trading ranging market is completely different from trading trending markets. You can see they are different. They are very different. Comma, it creates equilibrium. That's buyers and sellers are equal. You can see that here now, buyers and sellers are equal. They are equal until a breakout occurs. They are equal. Here, there's an equilibrium here. And there is no one in control. You can see there's no one in control in this market. So I said trading ranging markets is completely different from trading what? Trending market, because when the market is ranging, it creates equilibrium. That is, buyers and sellers are what? The buyers are equal to the sellers, and there is no one in control. There is indecision. This will generally continue until the range structure breaks out. It will generally continue until the range structure breaks out and a trending condition starts to organize itself. So that's why I said you have to wait. You have to be patient until there is a breakout. Just like a breakout occurred. A breakout occurred on BTC. A breakout occurred here. No matter how this market moves, no matter the play that it will do here. Just like I was having profit before. Now I'm having red, from green to red, but I haven't closed my trades because I know the direction of the market. I know that the market will stay dumb. It will stay dumb. it will stay dumb. So if I'm to be in, let's say now, if I'm a newbie now, I will start as I'm seeing red, as I'm seeing negative 13%, I will be shaking. Ah, this market is going against me. Oh, it's going against me. Oh, no. I'm still holding my trade.
Sir, please, I have a question.
Yeah.
Why do you strongly advise we don't trade in a ranging market? Because those buying up and down, that I think this is advantageous for a trader that knows how to read candle analysis well, to know there's a reversal.
No, you see, the reason why I advise that you should stay away from it, you understand? Some people, you know, drawing continuation patterns. Continuation pattern is very confusing. Initially, some took this particular pattern as an ascending triangle.
Yes.
Some said BTC will reach, some said BTC will reach 51K. I was laughing. I said, how BTC will reach 51K? Are you not seeing that? I told them that, are you not seeing that this thing forms what? A bearish wedge, a rising bearish wedge. And you can see multiple rejections around this 45K region, 45, 48K region. You can see multiple rejections here. So BTC, you can see 1, 2, 3 at the top. Did BTC break the line? No. Once BTC breaks this line now, this particular continuation pattern that you are seeing is invalidated. It will be invalidated.
So it is really strong. So you really strongly advise to stay away from this type of markets.
Yes, if you don't know how to trade it. If you don't know how to
okay, so is there a strategy of trading it?
Yes, you will target your tops and bottom. Your tops and bottom. Your entry here must be on point.
Okay, sir.
So just like I showed you guys now here, you can see that it stopped halfway. It didn't touch the peak. It stopped halfway. Likewise, these areas.
Okay, sir.
The reason why I took this sell from 48K is that I first saw a rejection. I waited, I saw first rejection here. I saw another rejection here. So I now took my sell from 47 down to what? 39. Because I know that price will test this area. You see all these wicks here. You see all these wicks here. That price will test these wicks that you are seeing here. So now that price broke out from this channel with a strong bearish engulfing candle, what are we now saying? Price will dump. It will dump. So let's continue. Any question? Any question? Okay. Now look at this.
So
Yeah.
So I wanted to ask a question.
Yes.
Now, yeah, strongly believing it would dump, but your time frame is really same. Like I haven't seen you doing like how you were talking about cross checking on other time frames to see a lower picture and higher picture of it.
Yeah. I can equally switch now. It's very simple. My entry, you know, I like looking at higher time frames because it gives me the bigger picture of how the market is playing out. You understand why I use lower time frame for entries?
Because for example, now I'm seeing it's trying to retest the support.
Yes.
But
Okay. Yeah. When I started this
I say,
class,
yeah.
when I started this class, I started with lower time frame, showing that
Mm-hmm.
that BTC has broken out. The higher time frame, it has broken out from what? From that range. You understand? It has broken out from that range. So I can as well visit higher time frame, because those are higher time frames, the candles will now be much. Just like you are seeing here. The candles will now be too much. It will be too much. One of the candle represent 1 hour, 1 hour, 1 hour, 1 hour. You can see it will not be much. Are you following? For the daily,
Yes, sir.
the daily tells more. One of the candle here represent 1 day. All the things that happened 1 day in 1 day to tell you.
Okay, sir.
Like this trade now, you see this trade. This tell us.
Mm-hmm.
I bought this tell us yesterday. Was it? I bought some yesterday. The reason why I bought tell us yesterday is that price is at what? A psychological support. This is a psychological support. I see this is a psychological support.
Yes, sir.
So immediately price touched that area. What happened? It left with a wick. Now, if price should close this candle, if this blue candle now should close above this red candle, it will now turn to a bullish. Then another hurdle that this market will face is this 0.735 is this place. Once it breaks this place and breaks this trend line and breaks this trend that you are seeing here, this bearish trend now that you are seeing here, goodbye. You will have a smooth ride back up. Are you following?
Yes, sir.
So the ones that I bought yesterday, I'm in profit like this. So you see the essence of knowing your technicals. Your technicals will give you entry.
So, but the confidence you have in placing a trade, I really wonder if it's something we can master. We can master now. Because you are really so sure. You are really so sure of everything you are saying. Like you are having the audacity you have is like the one controlling the market.
You know, that's the essence of this thing we are teaching you. If you take it serious, if you take it serious and practice, you will know all these things now. You will be interpreting, you will predict any chart, anything that come across, even if it's not crypto. You understand? Even if it's not crypto,
yes, sir.
you can be able to, you can be able to trade everything, anything that you want to trade comfortably. So that's the reason why. That's the reason why learning it and doing it yourself at your own convenient time is better than chasing signal. I follow.
Okay, sir.
So
Yes, sir, I'm following.
sometimes market will go against you. It will go against your wish. It's not every time you will get it right. No. Sometimes you will hit stop loss. I've never seen a trader that will come out and tell you that he or she, he as in he always win or she always win all the time. No. If you say that, I will run away from you. I will run away from you.
So how do we keep the consistency of making profit now?
So you keeping the consistency of making profit. One is what? Do not over leverage. Don't use greed.
I don't understand.
Don't use greed and over leverage. You have to know your risk management. So
Okay.
your risk management will come in play for you to stay consistent. You understand? Then another thing is
Yes,
that
sir.
your risk reward ratio must be what? 1:3. Between 1:3, 1:4, 1:5. Don't risk more than 3% of your capital.
3%
of your capital, of your equity.
So if you have $100 as your equity, you should not risk more than $3 for a trade.
Yes. You can risk, let's say you can put your risk, let's say now you have $100, right?
Yes, sir.
You can make, okay, set your stop loss. That's, you manage your risk by setting stop loss. That is how you manage your risk. Your stop loss is the risk, the amount that you are willing to risk. You can say, okay, that on this trade now, I'm willing to lose $5. You understand? I'm willing to lose $5 in order to gain $20. You can see that the risk is minimal, the reward is big. Are you following? So when you follow this strategy, consistently, even if when you lose, your wins will cover your losses and you will still be in profit, right? If you maintain this strategy. Let's assume now that you took 5 trades, for example. Out of that 5 trades, you lost 2 and win 3. Following this approach now, you will still be in profit, right?
Yes, sir. So it depends on how, if your take profit target was achieved in all the trades.
Yes, it depends on that. Then another thing is that if you lose 3 and win 2, you will still be in profit. You will still, because you maintained what? A good and healthy risk reward ratio. You maintained a good risk management.
Okay, so like for example, on the chart you have now, the red portion is the risks. And is it that before choosing let's say you choose your stop loss and then you put $5 on the trade, is it that stop loss now automatically it converts itself to that $5 risk?
Yes.
Okay, so your stop loss would always, no matter the size, the length of that red thing, it would depend on the amount you put.
Like you can see now, the green now showing green is my reward. You can see this reward is bigger than the stop loss.
Yes, sir.
If my stop loss should be like this now, how do you see? What do you see here? The risk and reward doesn't balance. It's almost the same.
Yeah. Yes, sir.
Who is doing this on my chart? Someone is messing my chart up. Hello, admin.
I'm here.
Check.
What's happening?
I don't have access to my this thing again.
Okay.
Admin, Miss Nosufo. Hello.
Yes, so we are there. What's going on?
I don't know. The admin stopped me from sharing. Are you seeing my screen?
Yes.
But why is this line now? I can't even remove it.
The yellow line.
Yes. Okay, let's continue. Let's continue. Don't mind this thing. Let's continue. Just that I don't have access to my screen. Like, okay. I don't know why this yellow line is popping up like this.
Someone must be touching his or her screen. That's why you've got a line here. Someone must be touching his or her screen.
I don't know.
People must just stop touching the screen.
Okay, let's continue. Let's go. Don't mind that line. So I said the best trading market is completely different from trading trending markets, because when the market is ranging, it creates equilibrium. Buyers and sellers are what? The buyers are equal to the sellers, and there's no one in control of the market. You know? Then note, the best buying and selling opportunities occur at the key support and resistance level. I told us that the best buying opportunities, this type of market, occur at the what? At the support and the resistance level. This resistance level, this support level. Then ways to trade ranging markets. Number one, ways you can trade ranging markets. Number one, by waiting for price to approach support or resistance level. By waiting for price to approach support or resistance level, then you can buy at key support and sell at key resistance level. So you have to wait for price to come down to your support, your key support level. Then you buy and take profit at what? At resistance level. But you still have to be observant so that this thing will not stop halfway and do what? And reverse. Number two, by waiting for the breakout from either the support level or the resistance level. So you have to wait for the best approach, in fact, is just to wait for a breakout. That's just the best approach to this type of market. Just patiently wait for a breakout to happen, to occur. When market is ranging, no one knows what is going to happen. You know, that's the essence of that statement I made, that is a trickish word, market. When market is ranging, no one knows what is going to happen. We don't know who is going to be in control of the market, comma. This is why you have to pay attention to the boundaries. All these areas are the boundaries. They are the boundaries. You have to pay attention to the boundaries. But when one of the players decide to take control of the market, comma, we will see a breakout of the support or the resistance. When market is ranging, comma, no one knows what is going to happen. We don't know who is going to be in control of the markets, comma. That is why you have to pay attention to the boundaries. But when one of the players, that's maybe buyers or sellers, you can put in bracket, but when one of the players, in bracket, buyers or sellers, decide to take control of the market, we will see a breakout. That's what happened here. you will see a breakout. Let's say now the buyers took over, you see a breakout here, continue buying. The sellers took over, you see a breakout downward, continue buying, continue selling. So you will see a breakout of the support or the resistance level. Huh? Note, the breakout means that the ranging period is over. Whenever you see a breakout, the ranging period is over. Note, the breakout means the ranging period is over and the beginning of a new trend will take place. It is best way to enter after the breakout. So your entry, the best way to do that, in order not to form victim here, in order not to miss the boundaries, the best way is to do what? To wait for a breakout to happen so that you will know the direction where the market will be heading next. It's important to remember that range boundaries are often overshot, giving the illusion, you see, sometimes the range boundary will just happen like this. Or let me use one of these things. Sometimes you will see it will go above like this. It will go above like this. You will say, breakout is about to happen. Or breakout, it has broken out. What will happen? Price will stay fall inside. They're leaving you with a fake out. It will not turn to a fake out. So, because they know that what these market makers know that retailers will put their stop loss here. You know, if I'm shorting this market now, for example, on entering here to take profit here, my stop loss will be around here. So what will the market makers do? They will just fake out and clear all the stop loss. They will clear all the stop loss around here. You understand? Then continue making what? It's sideways movement. So that's the reason why I said this market now, I will avoid it until I see a breakout. I will see a good, healthy breakout and retest. Are you following? So it's important to remember that range boundaries are often overshoot. You see, sometimes you can overshoot, giving you the illusion that a breakout is occurring. This can be very deceptive. It can be very deceptive. And it does a trap, or it traps a lot of traders. You know, it will just trap you, clear all your liquidity. Every liquidity that is placed here, it will clear them off. So it will trap the traders then who took their stop loss at this particular place. So that's why I said this type of market is very, very deceptive. It's very tricky. So any question? Any question? Ask your question now. If you don't understand it, ask your question now. Hello? Hello.
Hi.
We are 20 something in this class. Then we are currently reducing to 19. What is happening?
Maybe lack of understanding.
No, no, don't do that
Also,
way. If you don't
yeah.
understand anything,
Ask
call my
question.
attention. Ask question. You know, I've been shouting anything that you don't understand. Ask me, draw my attention back.
But coach, I don't think that's why people are living. You know, many people have been used to that 1 hour thing.
What about this class is a 2 hours class now.
Yes, so many people have been used to that 1 hour. So after when it's 9 something, people start living. So that is what they've been used to. We've been used to that. Like almost every class we've did is 1 hour, 1 hour.
You know, one thing is that as we are studying, you know, you can still be picking some things that will be vital to your trading journey.
Yeah.
You understand? Like me now, that's how I do my teaching. You know, I will teach, and still touch some areas, you know, and still fall back to that thing that I'm teaching. You understand? So
Yeah.
from what I'm maybe I will be saying, you'll be picking some things that will be vital to your what? To your trading journey. You know, yesterday I discussed how to flip time frames. You understand? Most of these things today now I've taught how to manage what risk. All these small things, you know. I've as I told you guys how to protect your what? Your profits, so that you will not see profit at the end of the day. Everything will just collapse. Because we are not the owner of this market. I'm not the owner of it. Likewise, everybody. So what we normally do, just come, due to our smartness. If you understand the game, you enter, you take profit, you go. Sometimes you take loss, you bear it and go. You understand? So you are not the owner of this market. And as a technical trader, don't have this mindset that other technical tools are not important. Everything is important here. It's important. What they are teaching you now is important. You know, so it's left for you now. After this class, you will now what? Identify those things that works for you. You bring all these things together and take what? The strategy that works for you better. Then you adopt that strategy and work with it. Every trader has his or her own trading plan. You must have a trading plan as a trader. Just like in other business, if you're in business, you don't have plan, you will fail. So that is the thing. Any question? Ask your questions. So
Please, sir.
This is a question time now. So ask me.
Okay, please, sir. If you are trading a ranging market,
Yeah.
and you are a day trader, can you use a lower time frame? Maybe you can still identify a trend or a different market structure in lower time frame.
Yes.
Can't you use that in trading it?
You can identify a ranging market from a lower time frame also. In fact, it will start from there.
Okay.
You understand? It will start from there. So you can as well, if you want to trade it, you can trade it. But you know, it's a very trickish market from what I've noted out here. If you don't know how to trade it, they will use you as exit liquidity. Are you following?
I'm following.
Yeah, so that is the thing. Any other question? Any other question?
Please, in calculating your stop loss, sir,
Yeah.
you said 3% of your capital or your equity.
Yeah.
Now, maybe I'm using a leverage. How can I make sure that the leverage is the amount as in the amount I want to lose?
You know, in trading crypto, leverage, you know, these brokers or exchange, you know, they will use leverage to confuse us. You know, leverage is just amount as an amount or something that's called maybe borrowed money. You can use small money to pursue what? To pursue big money, right? That's the essence of that leverage. But it's killing. It's very, very killing. If you don't know how to use it, it can kill you. If you don't know how to use leverage, it can kill you. And you know that the higher the leverage, the higher what? The more risky
the risk.
The higher the risk. Yes. So if you go and use leverage of S50 to trade, the risk will be high. If you are using that $100, when you use S50 or S20 or S30, then the thing that hits stop loss. Now your $100 go shake small. Are you following?
Yeah. Yes, sir.
At least it will shake. It will not turn from $100, it will turn to 80.
Yeah.
You know, but if you
more
use or more than, but
more than the 3%, yes.
Yeah, so if you can, you know, use like S7, S5, you are still within the range. So
If you
all
can
you
use
need to
what?
do. Hello?
Sorry, I missed. If you can use what?
X5, between X5, you know, if you're using isolated margin, between X5 to X10 is okay.
Okay.
It's okay. Yeah. So, but all you need to do is just to increase your margin. Increase your margin is the maybe the amount that you are putting in, you know. Are you following? Yeah, but if you use high leverage, stop loss will just affect your capital.
Yeah.
So are you suggesting isolated?
Yeah, you know, the difference between isolated margin and cross margin is that cross margin now, instead of, you know, the traders that use cross margin, most of them, they don't normally use stop loss. You understand? So you have to calculate very well. And if you observe very well, people that use cross margin, they use small leverage.
Okay.
They use like S2, S3. They use small leverage. The reason is that if you are using cross margin, your charges will be what? As the trade is moving, they will be charging you. They'll be charging you. They'll be charging you. You understand? So if it gets to a point that your equity cannot carry, the equity that you have on feature trading cannot carry those money that they are taking. If maybe the charges that they are taking from your trades, you no longer have money on your futures, then they will not enter into your spot. You see the disadvantage? They will enter into your spots and sort out funds from there.
I never knew this, sir. I never knew this until now.
So people that use cross margin is that they will use small leverage so that what the amount that they have on futures, understand, will what? Price will not liquidate them. They will not get liquidated. Are you following? They will not get
Yes.
liquidated. So Binance or this thing will be charging them small. As the trade is moving, they will be charging them small. But people using isolated, you will put a specific amount that this thing is what I'm willing to lose. And Binance will give you liquidating level. Hello. Yeah, so Binance, if you are using isolated, Binance will give you what? You will set your stop loss. Okay, this is the point that if price will get here, I will take a loss and go. And again, Binance will give you a liquidating point. So that once price gets to that liquidating point, they will just, your trade will automatically disappear.
Got you.
It will liquidate your what? That amount that you used to enter that trade. So yeah, are you seeing the difference now?
Yeah, I'm seeing.
So that's why some people, they say, if you don't want to avoid love letter from, they call it love letter from Binance, always set your stop loss. Always determine what you are willing to risk on every trade.
Okay.
Yeah, any other question?
So I have a question.
Yeah.
So what's the relationship between this percentage we see and this leverage of times X? So if I put a leverage of 10 times 10 and then the trade goes 100%, does it mean I get 100% of the money I stake times 10 of it?
It's the calculation. That percentage is based on, it's still based on leverage too. The higher the leverage, the higher the percentage.
Oh.
Are you following? The higher the
Yes,
leverage,
sir.
the higher the percentage, the higher the profits. That's why, let's say now, if we make a trade call now, you know, some people will decide to go with S30. Some will go with S5 or S10. When they start sharing their screen, you will see that person that enters with S30, you'll be seeing like 200%. While the person that enters with S10, you will see something like 60-something%. So you see the leverage that is playing out here. Then when that trade goes bad, the one that use S30 will be crying. That person will cry more. Are you following? That person will cry
Yes, sir.
more. But the person using S10 will cry less.
Oh.
Good evening, coach. Please, I have a question.
Yeah.
Sorry, let's say I enter market with $25
Yes.
in future, and someone else enter with $50.
Yes.
If the person is using 30 leverage, and me, I'm using 30 leverage, does it mean that if I'm going to, will I be liquidified? Am I going to be liquidated first if the market does not go well again, or what?
You know, it depends on one. It depends on risk appetite. Eh? Maybe your
Okay.
risk appetite and the other person's risk appetite may not be the same. But if two of you are using the same stop loss, two of you will get liquidated at the same time.
Okay.
You understand? But if
Yeah.
your risk is different from his own, maybe your own will get liquidated first, the person's own will remain.
Okay.
Are you following?
Okay.
So
Yes,
it depends on risk appetite.
Okay, sir.
That's why it's always good to take your own trading decision. Make your own trading decision. You understand?
Yes, sir.
Signals, sometimes signals, they will post signal, and you as a newbie will not look at the risk reward ratio. How can you be a trader? You are risking more than your reward. Eh? So some signals, they will drop some signals, you will hurriedly take it without looking at what? Your risk reward ratio, the risk reward ratio of that what trade.
Okay.
Are you following? So me now doing things myself, I already know where to put my stop loss. So that if price will go there and hit it, I will take a bounce immediately. So
Okay.
it's good to trade your own decision. Don't trade with another person's decision. That's why we are teaching you to be a better trader. Any other question? Any other question, guys? So tomorrow we will round up with the choppy markets, and then I will give you what to look out for in trading, as in scaling down your time frames and all that. You know, then we'll move into moving averages. Moving averages. You know, the essence, Mr. DK taught support and resistance, and I've been, you know, entering into those areas, because there's no way that I will teach market structure without touching support and resistance. So I touched that area. I even did a practical for you to see how to do support and resistance, right?
Yes, sir.
So after this market structure, we'll go to moving average, we'll go to Fibonacci. Then I will not give you the, on this final, I will not give you the main thing, how to work out your plan. So don't miss my class. Don't miss my class.
Something. Tell me something, sir.
Yeah.
Is it advisable to buy when a coin, let's say, is going up, then you miss it, then it breaks the resistance to turn it into support, and you notice it's going up? Is it advisable to buy it, or you leave it going?
That's if you are buying and the thing breaks support, as it breaks the resistance level, right? Hello?
I can hear you.
Okay, sorry, let me bring my chart again. Just like what you have here now. Let's say you are buying from here, right? And price broke this level. Price broke this resistance level, right? That's what you are saying. Then you are still holding your position. So your entries determines whether you will hold that trade or not. If my entry is at this particular point now, for example, you understand, I will hold it through. Just, I will be smart holding it through. What I will do is that, because this place is a very good entry point. Likewise here, you know. So what I will do is that I will make my entry here. As price approach to this level, to this resistance level, you understand, I will do what? I will still leave my trades, just like what happened on BTC. I will still leave my trades. I will know that price will definitely break this resistance level and still use this place as support. Then I will now use what? I will now move my SL, stop loss, to half of this place, because I know that price will not visit here again, having broken this resistance level. Are you following? Having broken and retested, price will not come back here again. It will not look at for another what? Another resistance, another broken resistance, turn support. So that's how I will be moving my stop loss up, gradually in profit. So that's the smartness. You can hold through, but your entry point matters.
Okay.
Any other question? So can we call it a day? Are we satisfied?
Yeah, I think it's okay.
All right. Good night, guys.